Hello Crypto Whales fellows. I hope you are doing very well today and have practiced the previous studied subjects completely. I also gave some tasks last session. Please make sure you did them before watching this episode of Indicators. Last sessions we talked about the main moving averages, how to apply them on the chart and how to use them to validate our analysis more. Today, we learn a new and a famous indicator called Relative Strength Index, or abbreviated into RSI. RSI is actually one of the most popular and most frequently used indicators that help traders find out about fear and greed of the market, the points of overbought and oversold, and thus can provide buy or sell signals for various securities in the market. First of all, let's see what is RSI and how does it calculate the outcome. As a momentum indicator, the Relative Strength Index compares a security's strength on days when prices go up to its strength on days when prices go down. Relating this result of this comparison to price action can give traders an idea of how a security may perform. RSI is mainly calculated through this formula. You may wonder now, why am I emphasizing on the RSI more? And I should tell you, if you consider yourself a trader or a learner who learns trading, or the one who claims is learning indicators in Crypto Whales Academy, then they should know what is RSI and its importance. Now that we know how does RSI work, it's time to know where can we use and how is it useful for us. The most important benefit of RSI is its ability to forecast the price behavior of an asset. It is also a great help for traders to validate trends and trend reversals. Besides, it can give us a signal of overbought and oversold securities so that we can get ready to take the opposite position. And finally, RSI can be used with others to support trading strategies. I think it's better to move my screen and see how can we apply RSI on the chart. Alright, like always, we move to the indicators section here and type RSI. TradingView doesn't write the abbreviated form, so you need to choose Relative Strength Index. Here, I think it's applied here. Unlike other indicators that are applied on the chart, this one is shown actually below the chart. Now, let's explore different, important parts of this indicator. Once we come to the settings of this indicator, the first thing that we see in the inputs section is the length of RSI. I recommend keeping it on 14 and set a time frame to the chart to keep it same with the chart's time frame. Alright, now you see a purple box here. This purple box is actually called RSI zone. The first important point that you need to consider about RSI is the zone that RSI is in. If we look a little bit closer, let me zoom in a little bit, yeah. If we look a little bit closer to the chart, we can understand that the top border is set to 17 here, and the bottom border is set to 13. The area between this 70 and 30 is actually called the RSI zone that I talked about. You can also see a line in the middle, this one, a dashed line that is set to 50. You can see in some parts the RSI line goes beyond the RSI zone, like this section here, that we call these overbought and oversold. Generally, when the RSI indicator crosses 30 on the ISR chart, it is a bullish signal, and when it crosses 70, it is a bearish sign. To put it in another way, one can interpret that RSI values of 70 or above indicate that a security is becoming overbought or overvalued. It may be primed for a trend reversal or corrective price pullback. An RSI reading of 30 or below indicates that an oversold or undervalued condition is occurring. Overbought refers to a security that trades at a price level above its true or intrinsic value. That means that it's priced above where it should be, according to practitioners of either technical analysis or fundamental analysis. Traders who see indications that a security is overbought may expect a price correction or a trend reversal. Therefore, they may sell the security. The same idea applies to a security that technical indicators, such as the relative strength index, highlight as oversold. It can be seen as trading at a lower price than it should. Traders watching for just such an indication might expect a price correction or trend reversal and buy the security. In order to see more examples, I want to take you to Ethereum chart. So I type ETH USCT. Yeah, this is Ethereum chart. And the RSI is also applied here. Let's make it a little bit broader and hide the drawings so I don't want to confuse you with my drawings. All right. We can see some sections that the index has passed 70, like here, and a little bit this section and here. In other words, the RSI index has entered to overbought level. Here you can notice that the index is lower than 30, and it means it entered the oversold zone. During trends, the RSI readings may fall into a band or range. During an uptrend, the RSI tends to stay above 30 and should frequently hit 70 and then come back. And during a downtrend, it is rare to see the RSI exceed 70 because it usually comes down and gets closer to the 30. In fact, the indicator frequently hits 30 or below. These guidelines can help traders determine trend strength and spot potential reversals. For example, if the RSI can't reach 70 on a number of consecutive price swings during an uptrend, but then drops below 30, the trend has weakened and could be reversing lower. The opposite is true for a downtrend too. If the downtrend is unable to hit 30 or below and then rallies above 70, the downtrend has weakened and could be reversing the upside. Trend lines and moving averages are helpful technical tools to include when using the RSI in this way. All right, I want to take you to the Bitcoin chart here to see some more examples and elaborate the bullish divergence in RSI. Let's move my time frame to weekly. That must be a good idea. Let's see. Okay. Let's open the drawings. Right. I want to zoom a little bit more so that I want to elaborate the bullish divergence for you. I'm keeping my RSI on 14, like always, searching for a point to show the RSI divergence. I believe this can be a very good example. We see that the price is descended in this part, and here is the composition of a lower low. Here it is. But if we look at the RSI, we see that paradoxically, a higher low is composed. 1 second, let me draw it for you. Exactly at the same area. 1 second, yes. We start from here to here. 1 second, yes. You can see that on the chart, my trend line is descending, But in the RSI, my trend line is ascending. This is called bullish divergence. When the RSI is ascending while at the same time the price is descending, it can be a very good signal for us that there is a bullish movement coming soon. And here you can see, this is an approximate bull run. There is also another form of RSI divergence, which is called bearish divergence. A bearish divergence occurs when the RSI creates an overbought reading followed by a lower high that appears with higher highs on the price. To put it simply, when the RSI is descending while the price is ascending, we see that a bearish divergence is occurred on the chart. This may indicate that falling bearish momentum and the price will probably enter a bearish channel. Let's see an example of bearish divergence on my screen. Alright, I believe that here it can be a very good example for bearish divergence. First of all, if you pay attention to the RSI here, we can see that the index has gone to an overbought zone above 70. As I move the cursor to the peak, on the price here, which is also ATH, I see a different kind of movement on the RSI. You see that the price is just started to move up from here to almost here, in these points. But at the same period, let me zoom in a little bit so that it can be much more evident for you. At the same period, if we start from here, exactly at this point, until here, the end of the yellow line above, this trend line can be drawn. This is what we call a bearish divergence. As I mentioned earlier, it gives us a signal that a bearish momentum is about to start, and it is totally clear that the bearish movement is starting. As you see, these parts we have a descending trend, then a pullback, and then a very long time descending trend after the ATH. Let me tell you a golden point here for you. This will elaborate the meaning of relative strength index more for you. What am I going to tell you is resulted by setting hours behind a chart and analyzing it inch by inch. Here is the golden point. Alright, here you can see that the price touched 60,000, almost ATH, and the RSI was 90, or was almost 90. And when the price starts to have a kind of pullback and we had a price correction, the RSI came down lower than the time when the price was 10,000. So let's have this comparison again. Here, when the price was 10,000, the RSI was almost 60. You can see the price is 10,000 here, and the RSI is 60. Okay? The price touched ATH and came down again. When the price is 30,000 here, the RSI is 40. So, it means that the asset had lost its strength. Similarly, when the price touched its ATH again, the RSI couldn't come back to the same point. These show that the price is not strong enough anymore, and indeed we are expecting a huge bearish momentum. The bearish channel is also evident, and you are also experiencing that right now. That shows the price had lost its strength. This was a thorough and detailed explanation of RSI and RSI divergences as one of the main and popular indicators in TradingView. In this episode, we learned how to apply RSI on the chart, how to set it accurately, and how to use it and interpret it. The relative strength index measures the price momentum of a stock or other securities. The basic idea behind the RSI is to measure how quickly traders are bidding the price of the security up or down. The RSI plots this result on a scale of 0 to 100. Readings below 30 generally indicate that the stock is oversold, while readings above 70 indicate that it is overbought. Traders will often place this RSI chart below the price chart for the security so they can compare its recent momentum against its market price. We also concluded that when the RSI enters the area below 30, it can be a good chance of entering to the market, generally speaking, starting to buy. And when the RSI enters to the area above 70, selling and saving profit can be a wise choice. If you've got any questions, please don't hesitate to ask in the comments section. Our team will respond as soon as possible. Don't forget to like if you found this video useful. We have come to the assignment part of the session. What I want you to do till the next episode is to move to the chart, apply RSI and change the length and see what happens. Then look closely to the overbought and oversold sections and check how the price has reacted to these areas. Then look at the divergence areas that I showed you earlier. Don't suffice yourself to that example. Search it on your screen, on your chart, and find some other points of divergence. In the comments section, write the name of the coin, time frame, and the time when the divergence had occurred. Remember, trade bravely.